Good morning, everyone. In today's video, we'll focus in on the crude oil inventories report. We just had a reason for a catalyst. The number we were expecting to see off of our inventories report was negative 1 million. The actual number we saw was negative 5 million plus, and so there was a discrepancy there. That discrepancy translates into volatility, which if we come to our charts here, you'll see how that volatility translates. Crude is currently selling off to the point where we've had to adapt the volatility models that we use to try and find a model that's doing a good job of containing the volatility from this inventories report. We switched from our aggressive to our doomsday aggressive. Even in the doomsday aggressive, you should notice we broke outside of the clouds. That took us to our conservative volatility box models, which is finally the model doing a good job of containing the volatility as we see it right now. Now the first part has been met. We've breached our zones. We're now looking for an edge signal. That's this green arrow off of a 1 minute time frame chart. That confirms we're officially in overbought, oversold territory. So now at this point, we're just waiting until that signal comes. But let's take a bit to recap really what's happened here. From the inventories report, we had something that we expected to happen that did not happen. We saw a different number. That number was green on Forex Factory if we just use color clues, avoiding what that represents. That means we're looking to buy the dip here. So far, crude is selling off from the inventories report news. We've had it breach our volatility box zones, and now we're waiting for an entry. The first part has been met where we had the breach. The second part is confirming that, hey, the conservative model here is actually going to be the one we want to buy from, and that's where we use the green arrow. So now we're waiting and watching until we get that green arrow. Once that comes, the trade setup is really met, and we're now looking to buy this dip in crude, use the inventories report as our volatility catalyst, and use the levels as exact zones where we'd like to get long crude and take advantage of volatility. Now for volatility box members or futures members, I also mentioned that we had a very similar setup in natural gas earlier today as well. We also had that report come out. So the same type of idea carries on there. We look for a catalyst. We then wait for price action to react to whatever report, news event, whatever it may be. And we then have exact volatility zones to try and take advantage of whatever the catalyst may be. All right, so in crude here, we're starting to see price action pick up just a little bit. We still don't have the green edge signal arrow, so still no trade. Once we do see that arrow, we're looking for an entry at the cyan entry line. That's the blue line on our charts. That's really the entry price we're looking at. You can also see that up above in the long entry labels. So at this point, still waiting, and let's see what happens. All right, so we now are starting to see the edge signal form. On the right hand side, I also have a chart of USO for those of you that like to not trade futures and prefer trading the underlying ETF. You can also use that. You'll see the setup is similar. Now coming back to crude here, we see the edge signal right now. As long as that finishes printing on this candle, the setup is now a go. We then be looking at the cyan line for our entry. And in case you trade options, you can also use the zone between the cyan line and the gray target line as your potential area zone. So now the edge signal's finished printing. We're looking for a pullback to the cyan entry line. Any pullbacks to that level are our entry pricing. If you trade options, that zone in between is where you can enter. All right, so crude has gotten away from us without really giving us an entry point. So no trade setup that met our rules here in terms of being a bit more conservative. However, I think this is a very interesting lesson still nonetheless on how you can use volatility, planned volatility events. So in this case, we had the inventories report. Use that to essentially prepare yourself for a known catalyst, then have exact volatility zones in which you're looking for price action to react from, along with a very clear signal, in this case our edge signal, to confirm that, hey, price action from this standpoint is actually starting to reverse, and what we expect to happen, in this case buying the dip from relatively good news, quote unquote, to actually come through and translate into the marketplace. And again, you can play these moves using either the full-size crude contract, the mini crude contract in QM, or even USO options, whatever you prefer. All right, hope this video helps, and we'll see you in the next update. Take care, everyone.